Hello, hello. Welcome to today's Growth Leaders Report, September 11th, 2024. This particular report, what we like to do is we like to pay homage to Mr. William O'Neill, his can-slim method. We're looking at stocks that exhibit fundamental strength and technical strength. We've obviously thrown on our own mix of technicals that we like, and this is what rises to the top. We like to filter that through by 52-week highs, and we want to see what is actually showing strength here in the market, particularly today, given the fact that we are trading through the end of summer volatility. The market is up one day, it's down one day. Right now it is down. So what's rising to the top? As yesterday's report came out, the Future Leaders Report, these particular lists are becoming less extensive as the market continues to consolidate, whipsaw back and forth, and that's completely normal. Whether or not this ends up being the top of whatever kind of market cycle we're in or not is obviously yet to be seen. As of right now, this is just very normal summer chop and volatility. But if you're inside of TTI, you know that we've taken a break off of taking positions in a lot of these higher beta areas of the market for an extended period of time, going back to like late July. We have not opened up a bunch of high beta stocks. As a matter of fact, we haven't really opened up any in terms of semiconductors, et cetera, right? So now what we're looking for is these are not necessarily high beta stocks. It says growth, but this is growth within the context of William O'Neill's can-slim idea. So growth stocks, once again, a blend of fundamentals that he likes, technicals that we like, and this is what we got. The list is rather short, given the fact that the market is wildly whipsawing back and forth, and therefore, we're not going to be looking to open a bunch of positions. Particularly right now, even if these are the strongest stocks. What we're looking for is some sort of pivot in the market. Having said that, a lot of the stocks that you see on this list here are repeat names for a reason, right? Typically, strength begets strength. It's a core tenet inside of TTI. In bull markets, the strongest stocks tend to be the strongest stocks for a long time. And obviously, in bear markets, the weakest stocks tend to be the weakest stocks for an extended period of time. Until the weight of the evidence shifts to the downside, we are still in a bull market. And therefore, we are focused on owning the strongest stocks in the market. Let's go ahead and go through a couple of these. Once again, I'm not super stoked at opening a bunch of new trades right now, given the fact that the market is whipsawing back and forth. We've picked and chosen our spots over the last few weeks, particularly low volatility stocks that are also getting hit with some of the market volatility. And so what we're going to do here is just look to manage some of the positions that we have on the books. First one I want to go through also was featured yesterday in our Future Leaders Report, ATAT. First thing I want to bring up is we're not going to be taking a position in ATAT from a TTI standpoint, but this is a valid horizontal level break into a about a year high. I was going to say multi-month, but this is a year high in ATAT. The reason why we don't particularly love this position, even if it does exhibit some of the characteristics that would make it valuable to a can-slim style trader, is that it's a Chinese related ticker, and Chinese stocks, as you are painfully aware, have not done anything for over 2 years. That's it. One of the biggest things inside of TTI and as a top-down trader is we want to stack edge in our favor as much as we can. We're not a bottom-up style group. And so from a tactical top-down analysis, we want to try to match up sector and industry strength with the underlying stock that we're trading. Chinese stocks have not had that strength for over 2 years, right? It's very simple. We can see it. We want to be long Chinese stocks above 33.5. All things considered, even though it's on the report, ATAT, see if TradingView wants to load. I don't know if it's my internet today or what, but TradingView is taking forever. ATAT, although it is breaking out, is not part of that Chinese sector that we want to own right now. So we're just not going to own it, okay? That's the first stock on the list. I wanted to bring it up, though, because it is on 2 reports back-to-back, so there is strength there. Next stock I want to talk through is a stock that we're already long, Shark Ninja, holding up very tightly into those 52-week highs. I get it. It's scary out there. The market's about to roll over. Bear market's about to start. But we still have these IPO range high breakouts that we've been holding all year that are consolidating near 52-week highs and potentially all-time highs. Shark Ninja is one of those stocks, right? We've had 2 or 3 different opportunities to own Shark Ninja. We want to continue to own Shark Ninja and potentially even add in above $100, right? We're waiting for that $100 pivot area somewhere up here to get hit. Reasonable to assume that Shark Ninja is going to do that when or if the market starts to pivot, right? So Shark Ninja, consumer discretionary name. Right now, consumer discretionary is struggling to capture any sort of relative strength against the broader market, but for whatever reason, Shark Ninja is. So when consumer discretionary starts to show a leadership role, which it really has struggled to do since the bear market lows, right? Those October of 2022 lows, consumer discretionary has really been an underperformer. We're right now starting to dig in on a intra-market relationship against the broader S&P 500. Does the market start to reward consumer discretionary here 2+ years into a bull market? Maybe. And if it does, I think Shark Ninja is going to be a great opportunity above the $100 area. If you don't already own this stock, the $100 pivot point gives you a great opportunity to risk on, risk off. Nice big round number, etc. You know where you're right, above 100. You know where you're wrong, below 100 and some change, right? Next stock I want to go through is App. We're already long App. For whatever reason, prior to the market pulling back earlier today, App was actually up 4%, and it's still actually holding its pop up. Now, we've owned App for a majority of the year, right? We owned it way back here, actually in 2023, as it broke above 45. So this has been a trade that we've owned off and on for the last almost year, and it was a big win for a lot of the TTI members. It was the first 1,000% winner. We were able to buy it down here as it was breaking the range, and we held it through the gap and the run up. So first 1,000% winner for a bunch of traders inside of TTI. Really just comes down to owning strong stocks in bull markets, not being afraid of the everyday volatility as long as trends are in our favor. But since May, App has gone sideways. So I want to point something out. Core tenant inside of TTI, we have 3 of them. The second one is relative and absolute strength. We want to own names that are showing absolute strength against the market, obviously, right? We want things moving up in a bull market, but we also want things that are holding up or performing better than the broader market. That makes total sense, right? If we want to outperform the benchmark, we have to trade the names that are outperforming the benchmark. App is that name. The market has been choppy for the last few months. App has gone sideways, horizontally channeling. Therefore, there is relative strength in the name. We do have a new position in App. It's not new, but we established it as it broke up and over the $88 to $90 area. And we're expecting a 105 to 110 price push and then potentially all-time highs relatively coming on an absolute and relative basis against the broader market by the end of the year. We're positioned in December's and January's. We also have some October's on, but there's an opportunity for you guys to own it as well, right? The contracts are around break even or slightly down, given the fact that we've chopped around since the original 90. We're looking for the $100 area to act as short-term resistance and a potential pop up and over towards that 105, 110 price target. Opportunity for you to own, if you want, a leading software stock over the last year. Once again, big win for us earlier this year. First 1,000% winner. Since then, since May, it's really hasn't done a whole lot, but still showing relative strength, holding up well. And by the way, just to show everybody, everyone's freaking out and stuff. Software is still holding up near all-time highs, right? So from an industry group standpoint, although software's range is rather wide, it's going sideways with the broader market going down. That's relative strength. App, once again, going sideways with the broader market going down over the last few months. Therefore, relative strength here. If you want a software stock, large cap, liquid on the chain, not super expensive. APP is a good play, and once again, it is on the Growth Leaders Report. Next one I want to talk about is PLTR. We have a position in PLTR. We were able to turn it free over the last 2 days. We have big expectations for Palantir. We have contracts going out to November, December, January, kind of targeting that end of year run in Palantir. Obviously, had no idea that it was going to be included in the S&P 500. It had absolutely nothing to do with the trade that we took. We just bought it up and over the 27.5 breakout, and we've held it since. We have a $40 price target. There's no real opportunity to enter the trade here. We're obviously already gapped up post S&P 500 inclusion. We're in the middle of the range here. We've made it about 40-45% to our overall price target. Right now, if you're in Palantir and you followed us on those November or January $40 calls, it's just sit tight, manage risk. This should be a free trade across the board. It's up 100+% for everybody. This could end up being, a multiple 100% winner, depending on how Q4 goes. Could be a potential 1,000% winner. You see Bank of America and some other financial institutions raise the price target post S&P 500 inclusion all the way up towards that $50 price point. Who knows what could happen? The market does pivot back up towards into new highs as it normally does in Q4. Palantir is in an excellent position to outperform, and obviously we already have that position on the books. Next one I want to go through here is CAVA. We do not have a current position in Kava. We were unable to establish a position prior to the big gap up, but we are stocking this position. You can see the chicken scratch here. This is our vintage COD setup, right? Change of direction off of a power earnings gap. Very simple setup here. Not saying that it's going to work 100%, but we like to see these big gap ups. This was also a name that we've traded multiple times throughout the year. So there are some traders in the group that still hold shares positions from the original entry, but there hasn't been an entry in Kava from a group standpoint for multiple months now. We're looking to get long on a rebreak of that previous extension high, right? So this power earning gap gapped Kava up. What was it? Nearly 20%. You never want to chase a position up 20% as a swing trader. It's a terrible, terrible idea, particularly if you're trading options. give the contract an opportunity to get crushed as breakout traders look to tail. We like to wait for these things to consolidate, premiums to come down, and to get a discount. So I don't have my options broker up right now. I can't check the options contract history, but I encourage you to go and look at like the 140s, 135, 140s for January, February, March of next year. Look at the price as opposed to the third week of August compared to now. Those things are probably down 50% or more, meaning we have the exact same trade idea as the guy that bought it here. We're expecting the same resummation of the uptrend, but we're getting them for half off. So Kava, it's on the list. It's on our watch list. We want to own it, but we want to own it on a rebreak above 125-ish, and currently we're trading 120. So this is stock listed, watch listed, stock listed, both of them, right? Last one I want to go through here. Well, there's two more, I guess. YOU, a trade that we already own. A trade that we were able to turn free 2 days ago. This is something that we broke out of 24. We owned it. Very simple stage 2 breakout here. I'm not saying that setup is easy or whatever, but it's simple to know where you're right and where you're wrong. You have a range high by the breakout. This went out during one of our mid-monthly charting sessions in the beginning of August. Our monthly charting session, we owned you. I have a shares position. We have multiple people in the group that have contract positions. They're free off of this gap up, and now it's just wait and see how far this thing wants to go. So there's no risk against us whatsoever. These contracts pull all the way back, and let's pretend we mismanage them and they go to negative 100%. It'll be a wash trade, but we should be able to pull something out if this breakout does not continue to stick. As of right now, it makes sense for this to hold as support and for a continued press to the upside. If it starts to fail below 28.5-ish, we'll talk about cutting those contracts for a win. Maybe not a huge win, but a win. Nothing to do here. Instead, unless you're managing a position, which is obviously turn it free as quickly as possible, let this thing run to the continued price target, which the next one up is 36.70. Good trade on YOU. Last one I want to talk through is First Solar, and it's not necessarily the trade itself. We've traded First Solar multiple times. You can see the previous time we had a trade idea here. We've traded it multiple times in 2022 and 2023. This is a front runner for a solar stock, right? It's one of the biggest stocks in the solar sector, but it trades like a small cap at 4.09 ADR. It's a good trading vehicle, particularly if you can catch it into a breakout scenario and there's trends to back it up, momentum to back it up. Reason why I want to talk about First Solar is not necessarily because it's a buy right now, but something inside of TTI that we're going to be talking about possibly tomorrow or Friday is clean energy and the solar stock, solar industry group in general, showing hidden bullish divergences. Most of you guys are going to look at this and go, I don't fucking care about this. And I totally understand because it's not a buy signal right now. Divergences in momentum very rarely work as timing indicators, but they do tend to shift bias, meaning should you be looking to short the solar sector if prices are hitting lower lows, but momentum is hitting higher highs? Probably aren't going to get the results you expect out of those shorts. Not necessarily saying it's time to own solar stocks, but when we start to see this momentum wane into new 52-week lows, which we saw, 52-week low in solar stocks, stamped out with a higher in oversold momentum, came down and retested those 52-week lows, held that level. So we're starting to hit a series of potential higher lows in momentum. When you correlate this with an absolute pop, which in this case would be above the 200-day moving average potentially, or some sort of absolute performance to the upside, the odds of a trend reversal to the upside start becoming a lot higher, right? So we're seeing momentum diverge away from sellers, put the ball in the buyer's court. We just need price to start acting accordingly. PBW is another one. TAN is your solar ETF. PBW is your clean energy ETF. They have a lot of lap over, right? A lot of the same stocks in two. This is the worst performing industry group over the last 4 years. PBW is the worst performing industry group over the last 4 years. These stocks have absolutely been crushed. A lot of the names we traded in 2020 and 2021 have been delisted. But now, going back to April, we are seeing positive momentum in hidden divergence, right? We're seeing lower lows, but we're seeing higher lows in momentum. So once again, this is not a timing indicator, but it is showing you that into each new absolute low based off of price, there's less and less seller enthusiasm down there, meaning eventually you would expect buyers to eclipse the seller in terms of buying and selling pressure. We would expect some sort of breakout. So what we're looking for here is some sort of bottoming out process in clean energy and TAN. We're looking to eventually get long clean energy and TAN names. Reason why I bring all this up is First Solar is on the list here of these growth leaders. I would expect this stock to be a leadership role within those two industry groups when they eventually do start sticking those breakouts. Once again, this is a large cap. Trades like a small cap. And it's not only a semiconductor name, but it has exposure into clean energy and solar as well. So keep First Solar on your watch list. It might not be a buy today, but from a trading vehicle standpoint, this is a very, very efficient trading vehicle. Okay, so I'll give you one more chance to look at the Growth Leaders Report. We're not opening anything up here inside of TTI. We're managing winners that we have on the books right now. Some of those winners we opened up in February. If you have any questions regarding the Growth Leaders Report and you're inside of TTI, leave them in a comment below on the video inside of the market research portal. And if you're interested in taking the trades with us in the future off of this Growth Leaders Report, link is in the description. Feel free to sign up, and you'll have access to all of this stuff on a day-to-day basis. My name is Hamilton. I'm here at the Trading Initiative. If you like this type of content, please like and subscribe. Leave a comment below. This is what we got. This is what we're working with. We'll see where we're at next week for next Growth Leaders Report.